Bitcoin mining hardware is a $20 billion industry today. By 2030, it's projected to hit $67 billion. And right now, sitting at 46 cents, there's a NASDAQ-listed company that doesn't just sell into that industry. It built the industry, founded in 2013, the first publicly traded Bitcoin mining hardware company on Earth. Two revenue engines running simultaneously, machine sales and its own mining operations. Over 1,500 Bitcoin on the balance sheet. Mining revenue just hit a record $28 million in a single quarter, and the market is pricing it at 46 cents. Here's what makes this worth your time today. Revenue came in around $269 million. Q2 alone hit $100 million, beating expectations. Gross profit has turned positive. Analysts have a consensus price target in the mid-$3 range, with some pushing as high as $8 in best-case scenarios. From 46 cents, that's 550 to 650% upside in base case, over 1,600% in the bull case. Now, cheap sounding doesn't always mean worth it, so today we're going through everything. The revenue, the mining operations, the balance sheet, the competitive risks, and the 3 honest scenarios for where this goes. If that's the kind of research you want before putting a dollar to work, hit subscribe. All right, let's reveal the stock. Meet Canaan Incorporated, ticker CAN, listed on NASDAQ with a market cap of $476 million. Still tiny compared to its global footprint. Here's what makes this interesting. Canaan isn't a crypto casino. It's a Bitcoin mining infrastructure company, founded in 2013, long before most people took crypto seriously. Canaan builds ASIC mining machines, specialized hardware that secures Bitcoin, and operates its own mining facilities, producing Bitcoin directly. This matters because they don't rely on one revenue stream. Think about it like this. They sell the shovels, and they dig with them too. Canaan has deployed mining operations across North America, Asia, and Africa, including Ethiopia and the US. These aren't idle machines. Installed hash rate recently crossed 8 exahashes per second. That's real. Revenue-generating computing power. Now check the external validation. Institutional operators and mining firms, the serious ones, are ordering Canaan's Avalon A15 Pro units. This isn't retail hype. This is industry demand. In the most recent quarter, Canaan mined 284 Bitcoin, growing total holdings to over 1,500 BTC on the balance sheet. Let that sink in. At current prices, that's a meaningful treasury asset, not a footnote. Now let's be balanced, because credibility matters. Canaan competes with heavyweights like Bitmain and MicroBT, and pricing pressure is real in down cycles. Execution risk exists, regulatory exposure exists, and margins will always be tied to Bitcoin economics. But here's the difference. Canaan survived multiple crypto winters. Weaker players didn't. All right, let's flip to the numbers, because this is where the narrative transforms. First, revenue. Full-year revenue recently came in around $269 million. Q2 revenue hit $100.2 million, beating expectations. Mining revenue alone reached a record $28.1 million. That's meaningful, because 2 revenue engines are firing: machine sales and mining revenue. Now look at the balance sheet lens. The company holds substantial cash and digital assets, with Bitcoin acting as a volatile but real reserve. That matters in downturns. Analysts aren't betting on perfection here. They're betting on survivability plus scaling. That's a very different risk profile than most sub-$1 names. Margins? Historically pressured? Yes, but losses are narrowing. Gross profit has turned positive in recent quarters, a major turning point from last year. Let's talk valuation forecasts from analysts. Consensus price target sits in the mid-3 range, implying roughly 200 to 300% upside. Some firms even push as high as 8 in optimistic scenarios. From 0.68 today, that range implies roughly 250 to 400% upside in base scenarios, 600 to 1,000% plus in best case. And this is why this setup works long-term. You're not betting on a single product cycle. You're betting on ongoing demand for compute, efficiency, and network security, regardless of short-term Bitcoin noise. Let's steep this in logic. Revenue is real. Machine sales, stable revenue, mining, recurring asset generation. Hash rate equals revenue producing power. Bitcoin holdings equal Treasury asset. Market cap is not currently priced for this reality. When revenues are increasing nearly 2 times year over year, when mining revenue hits record numbers, when Bitcoin holdings grow, that's not hype, that's operating leverage. Compare that to peers trading at multiples of revenue, not fractions of it. Every incremental improvement in margin doesn't add pennies. It adds tens of millions in enterprise value over time. Not acting is a decision. And if this infrastructure becomes more valuable, sentiment could shift fast. So here's my question for you. Would you rather own the asset or the infrastructure that keeps it running? Drop your thoughts below and ask yourself honestly, if this doubles before the crowd notices, would you be glad you studied it or annoyed you skipped it? If this helped sharpen your thinking, send it to someone who overthinks entries. Think bigger for a second. Bitcoin acts like digital gold, but gold needs miners. Canaan fits as a high optionality infrastructure layer. It's a high beta, high optionality piece of the blockchain infrastructure theme. It could hedge certain crypto price moves if mining revenue continues to grow. It contrasts with larger semiconductor makers like NVIDIA, but sits in the same structural tech trend. High-performance compute. This isn't a replacement for Bitcoin exposure. It's a levered complement. Infrastructure earns whether coins trade sideways or surge. Let's be real. Most investors look at 0.68 and see cheap. Cheap sounding doesn't always mean worth it, but value happens when progress and perception align. If revenue growth, mining execution, balance sheet improvement continue, perception could shift fast. Here's the turning point. Management has said repeatedly that efficiency and scale, not hype, is the long game here. We've seen this before. Early Amazon wasn't priced on profits. Early NVIDIA wasn't priced on dominance. Infrastructure always looks boring, until it isn't. So here's the takeaway. Canaan might look like a penny stock, but underneath is an engine connected to one of the most powerful tech trends, crypto infrastructure. Revenue is growing. Mining is scaling. Analysts see upside. Miss it now. And you notice later, nothing here is financial advice. If you found value in this breakdown, like the video. Subscribe for more hidden infrastructure stories. Drop a comment. What stood out most? Mining revenue, Bitcoin balance sheet, valuation gap. In the next video, I'll break down another infrastructure name. Different sector, same asymmetric setup. One of them is built for stability, one is built for torque, and understanding the difference is how portfolios compound. Stay intelligent. Stay curious. See you in the next one.